A second day of pullback of the silver's price, and that may be good news on one hand, but there's something that is emerging that is quite troubling, especially if it continues to creep up and climb up. We'll discuss what that is in this video as we explore. Silver had what I thought was an expected pullback, a consolidation. In my view, this is somewhat normal, and I'm still celebrating silver being above $37 an ounce. But nonetheless, it is what I had predicted, and it has come true, at least for these 2 days of consolidation with the price movements to the downside. But what is causing the price to go down is not necessarily for the reason I said it would come down. We may see more of that later. So here's where the numbers are now for gold and silver. I'm also going to be giving you the other precious metal prices too, because there's been an intriguing move in another precious metal I'm going to tell you about here in a moment. First, during the dips, it's a good time to buy precious metals if it's within your budget and level of understanding. And Summit Metals has a great and widening selection of precious metals, gold, silver, and now platinum. And they also have excellent customer service and more features on their website. So check it out at summitmetals.com. Elevate your wealth with Summit Metals. So gold and silver are the only two metals that are down today of the 5 that are being reported over at Kitco. Gold is down just 0.45%, down $15.10, a marginal drop in price there to $3,329. But again, it has not fallen as much as silver. Silver took the biggest hit today of all the metals. And again, to be expected, just as I predicted, it has happened. It is now down over 1%, 1.15%, down 44 cents today to below $38. It is sitting now at $37.75, just moments before the markets close. And why is that? Why are these metals down today? I'll tell you here in a moment. Platinum is up $9 today to $1,379. Palladium is up over 1%, up $13 to $1,215. But rhodium blew them all out. Rhodium is up over 2.2%. It's up $125 a day, climbing to $6,125. Now we're seeing them low here fall. A Bank of America fund manager survey saw the fund managers saying that being short, the U.S. dollar is the most crowded trade at the present. Veteran traders know that when there's too many traders are on the side of the boat, that trade has probably already run its course, and that the U.S. dollar index has bottomed out, and that has significant implications for many markets. And so today's U.S. Consumer Price Index report was not deemed problematic for inflation. The U.S. data point for the week saw that the CPI for June came in up at 2.7% year over year, which was in line with market expectations and compares to up 2.4% in the May CPI report. The core CPI, excluding food and energy, was up 2.9% annually, also in line with expectations. Markets showed no significant immediate reactions to the data, but as the day has gone on, we were seeing some of that, and gold and silver have been pressured downward. But the dollar index has rallied, and the bond yields upticked on notions that inflation is still sticky enough to keep the Fed standing pat and not cutting interest rates soon. And really that goes back to how we think about inflation and what measures it. But the dollar is stronger today, and that is primarily what has pushed up the prices. It is now up 98.63, a 0.52% increase. That's a big deal. That's a pretty big increase. Noteworthy indeed for sure. And interest rates are still not been lowered, and we saw the bond yields go up too. So that is strengthening the dollar here that we're seeing. And so what about this sticky inflation? Well, these inflation numbers, as reported by the CPI, really are a consolidation of different measures that affect the price, not just inflation. Inflation is caused by the overprinting of these, which causes the value to go down. And I don't know that we really have a true measure of that anyway to really calculate what that can be, because that term is conflated with so many different other factors, including supply chains from the time those are being measured. But the M2 money supply, the amount of money that is in circulation, whether it be in the form of paper dollars or electronic form, that is increasing. And that is troubling, and that will probably likely add to the inflation report. But also tariffs, another measure. And remember, what has been pushing up gold and silver prices in through last week is the announcement of tariffs, 50% on copper, and they think that silver could be added to that, especially silver. But also just concerns about tariffs in general have also supported gold's price moving to the upside. So that is something that is not fully worked out yet, although just today there's been an announcement of a deal with Indonesia where they will pay 19% and we will pay nothing. And so that deal has been made, which means that some of that cost will trickle down to some of us, at least in the short term. Now, again, understanding the nuance of how tariffs are work and what companies in those other nations will do in order to be competitive with American companies, that's another matter. Or just be competitive on the world stage and have access to American markets. That is extremely valuable to many of these nations, and Trump understands this, which is why I think he's been so bold with some of these tariff talk and proposals out there. So we're going to keep an eye on that and see how that plays out. But it is quite intriguing to see how that is playing a role in the markets in general. And so today's U.S. Consumer Price Index report that we're seeing here is something that the Fed is going to be standing pat and not cutting interest rates soon. And that, in a sense, is part of the reason why the prices are down. Who knows when they're going to raise them? Will they raise them in September? Likely not anytime soon beforehand, and I think that is playing a role here. Now, August gold future bulls have the overall near-term technical advantage there. The next upside price objective is to produce a close above the solid resistance at $3,400. And the bear's near-term downside risk objective is pushing futures prices below solid technical support at the June low of $3,250. And so that's what we're seeing there with gold. But silver is really the more interesting metal right now, as the futures bulls have the solid overall near-term technical advantage. In fact, the futures price is above $38.10, I think, last time I checked. Silver bulls' next upside price objective is closing prices above the solid technical resistance at $40. We were 30 cents away from $40. Many of you believe that we're still going to see $40 silver by this Friday. I poll tested it, and the 66% of you in my last live stream said that we're going to see the $40 silver by this Friday. Still could happen. I kind of doubt it. I was not one of those who thought that was going to happen, by the way, and so we'll see how that plays out. So the next downside price objective for the bears is closing prices below solid support at $36. Remember, and for those of you who have been paying attention to this channel for any length of time, it wasn't terribly long ago that I was talking about how $34 silver was so important. Well, now we have solid support at $36. That's good news. Yes, indeed. But really what's concerning here as we work through some of these numbers is what is going to potentially have a situation that could be alarming down the road, and that is inflation. It could rear its ugly head back again, and that's going to weigh in on everything, and probably gold and silver, and that's going to cause gold and silver to go up in time, no matter what the Fed does. If we see it kind of rear its ugly head again and stay sticky and persistent, well, Trump's got to do something. I think likely with the tariffs, he will probably lower some tariffs to adjust accordingly, because the Federal Reserve is not going to lower interest rates as long as we have inflation that remains sticky. And so that is kind of what we're looking at here. But that is a real situation that could be emerging that is troubling to see inflation kind of come back here. And how you measured to see it move up there, it's still with us, folks, in spite of what the president says. And I'm a supporter of the president, but inflation is not non-existent as long as the Fed keeps printing these dollars. And nonetheless, and they're trying to tighten on one hand with high interest rates to kind of constrict the economy. And on the other hand, they're printing more of these dollars, these Federal Reserve notes. It's really kind of insane to think about, but that's exactly what we're dealing with. They're pushing and pulling against their own interest and own objectives. So we'll see how that plays out. Now, again, some people ask about the kind of silver I show in my videos. I showed this in a previous video the day I got it, but this is a 3-ounce piece. This is the Tree of Life. It's from TDS Metals. Very, very nice, well-produced piece here. This is the Tree of Life, but if you look at it from a distance, it kind of looks like a nuclear explosion, kind of contradicting sort of what the nature of what it is. But a fascinating piece in there. I like to give you the latest news in the world of precious metals, so I hope you will consider subscribing to the channel and pressing that notifications bell down below. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.